right, thank you everyone for joining our next panel, our container ship panel. I'm looking forward to hearing from everyone on our panel today after hearing from multiple sectors. And let's get in. Thank you very much. My name is Tate Sullivan. I'm in Maxim Group covering shipping companies in the Equity Research Department. Thank you to our panelists and our audience today for attending Capital Link's 17th Annual Maritime Conference. And thank you to Nicholas and his team for arranging a great lineup of events. Participating on our container shipping panel today, and I'll introduce by company executives by their company names. From Danaos, ticker DAC, CFO Evangelos Chatzis. From Euroseas, ticker ESEA, CFO Tasos Aslidis. And from Global Ship Lease, ticker GSL, Executive Chairman George Youroukos. And from Toepfler Transport, Managing Director Clemens Toepfler. Thank you to all our panelists for joining, and let's jump right into our conversation. And as a way of starting our discussion, I'll rotate around to each company by way of a recent company event. For Danaos, Evangelos, as a way of introducing your company, can you provide an update on managing the size of your existing fleet ahead of taking delivery of 6 new builds in 2024? And I believe, for instance, you completed 2 ship sales in November and 1 in June. Related to that, can you sell older ships today for scrapping for gains as well? How do you manage your fleet ahead of new build deliveries, please?
Thank you, Tate, and good afternoon to everyone. Of course, we're not going to shy away from divesting. As you mentioned, we've already sold 3 ships. But what has happened in our sector over the prior 2 years, we were in a very robust environment where we could fix any ship for 3 to 5 years at terrific rates. And it made no sense in most cases to sell ships. It was much more accretive to cash in the charters that you could fix. Going forward, obviously, as it was mentioned also before in the analyst panel, we're going to need to renew fleets. People sometimes forget that vessels are aging assets year by year. We also have to meet technology challenges up ahead. So yes, ultimately the older fleet will have to be phased out. But as long as you're making money and the returns are good, you will manage it in a way that you see fit, depending on where you are in the cycle.
Can you sell your older container ships for scrap today for a gain, roughly, Mark?
Well, if you could even sell them for further trading, if someone is interested. And with all the money that these ships have made over the past years, you're definitely well in the money. So it's not a matter of deciding, do I want to sell today to realize a good return on my investment? This has already been realized. So it's a matter of how much money you need to invest in a ship for it to keep trading versus what you expect it to earn, and also balancing this with the capital that you have available to invest in fleet renewal, because in order to maintain your position as a company with all the ships that will eventually come out, you're going to need to be proactive, place orders, and to maintain your position to begin with, and then start thinking about growing without making bets that are outsized.
Great, and then a lot of conversation on the container ship and the current new build cycle. And Tasos, you are also scheduled to take new build deliveries in the next 2 years. I've heard in other sectors some small delays in new build deliveries. Are there any signs of new build delivery delays from any shipyards at all? And what is your contracting strategy ahead of taking deliveries of new builds, please?
Thank you, Tate. Good afternoon to everybody from me as well. Thank you to Capital Link for inviting us. I think we are about to take delivery of our first new building in a couple of weeks. I think that's a very modest delay, probably 5 days beyond the originally intended schedule. To the best of my understanding, the rest of our new building program is currently on schedule. We have one other ship to be delivered in June, and then our next delivery start late this year and into next year. So I have heard a little bit of some delays in general, but we haven't experienced, as I mentioned, any noticeable delays for those. In terms of contracting the ships, I mean, it was a very strong market for the last couple of years. You could fix forward. The first two of our new buildings we fixed forward a year ago, this time last year, at great rates. Of course, now there isn't as much of forward business you can conclude, so we have to wait as the deliveries approach to book our remaining new buildings on charters.
Thank you, Tasos. And moving to global ship lease, GSL, Mr. Youroukos, your company has repurchased shares, and how do you evaluate in this market, this point of the container ship cycle between making ship acquisitions versus purchasing shares, repurchasing shares?
Yeah. Good afternoon, and thank you for the question. Well, capital allocation is something that it's one of the most important things in a public company. Over the past couple of years, had a super cycle. Shipping is cyclical, though, we all know that. The container market was at a very high level, now it's at much reduced level. Therefore, somebody has to weigh the risk between, managing the balance sheet and taking the opportunity and jumping on deals, buying ships. So with this, the options for capital allocation, the menu, let's call it, has for us five options. The first option, obviously, is to build cash liquidity. That's the most important in difficult times. Companies have to have a strong balance sheet and strong liquidity. The second is deleveraging. By deleveraging, you obviously build equity value for the shareholders and follow the contractual obligations to the company. The third option is the dividend. This is a very important option for us. We have made sure over the years that we build our contractual EBITDA. We contracted our EBITDA forward in order to make sure that we have a sustainable dividend, which today is at $1.50 per year, giving us about 8% dividend yield. Then the fourth is the buybacks, share buybacks. That's something we like and we do, and we have done so far $40 million worth of share buybacks. And the last, obviously, is buying ships. You have to very carefully time that, because that's the bloodline of a company. Over the last 18 months, we have not bought a single ship. We've looked at various transactions. None of them, on a risk-reward base, met our criteria, so we passed. Prior to that, we bought like 25 ships within the 6 months. So we timed our acquisitions just before the market went really high, and then we milked the cow. So just to say a little bit of a general paradigm, container shipping companies are like cash cows. But every cow you have to milk and milk and milk, but at some point you have to feed the cow, otherwise you're going to keep milking and the cow will die and there's no more milk. So in other words, what I'm saying is, you have to buy some ships at a point when values are good and accretive acquisitions, so that you can feed the cow with more EBITDA and more free cash flow, so you can keep milking away and returning equity to the shareholders. So with that, I would just say that we are focusing on two things right now: purchases of ships at accretive prices, as we see the market now that has turned and more opportunities come, and share buybacks. Thank you.
Thank you. A much better description of a good fleet renewal strategy. Can we move to Toepfler Transport, and can you give some background on your company and recent S&P activity, after what we heard from Mr. Youroukos and recent S&P activity in the container shipping industry today versus a year ago, for instance?
Yeah, thank you for the invitation. And we are shipbrokers in Hamburg with offices in Singapore and Shanghai. And I personally do mainly containers. Otherwise, we as a company do a lot of research and a lot of activities on new buildings and S&P in multipurpose heavy lift and the short sea markets, so the 5 to 10,000 deadweight ton ships. And on the activity, obviously the activity is different now than it was a year ago. It was a massive activity last year, and the prices were obviously very, very high. But right now, for the last few weeks, we see also a lot of demand for container ships. The market has bottomed out for now, and now a lot of people who were scared of buying into the falling knife now are coming to the market. In general, right now, I would say, it feels like it at least, about 50% of the purchasing interest for container ships is backed by trade into Russia. And so it's the Turkish, Dubai, Chinese buyers who are actively looking into that area. You have the other players there are people who have maybe, let's say, around $10 million and who were not able to buy even a 20-year-old 700 TEU ship during the boom time. Now for $10 million, you get some decent ships. So they are now coming to renew the fleet. And then you have people still like the MSCs of this world and some others who are actively looking for still renewing their fleet, buying tonnage, but that's mainly on the slightly larger vessels. But it's very, very active right now because for many people it seems like we have reached bottom. So a lot of buyers now active.
Thank you for those comments. I mean, I'd be interested to hear from the other panelists if you have, I mean, what in historical new build cycles has indicated the bottom? Has it been this increase in S&P activity? Has it been companies securing contracts well ahead of new build deliveries? Does it need to be a combination of those factors? And I mean, do you echo that? Have we reached the bottom, Evangelos?
Well,
in terms of rates, I would say.
In
terms of rates.
In terms of rates, well, we've seen a pickup recently, a small pickup in rates, which means that, you know, we've seen some sort of plateau. And definitely rates are not what they were the past couple of years during the super cycle. We had predicted that they would not be as low as they were back in 2018 or 2019. This is what is happening now. The issue now is that you have durations that are much smaller. So people, charterers want to maintain the flexibility of managing the asset in a very flexible way, and typically they would ask you for short periods with options if they can get them. But the actual rate that you can charter the ship today for 6 to 12 months is still a very healthy rate. And the issue around second-hand prices versus new buildings and where the market is, one thing that, you know, we did not have in the past as a factor is ordering ships because of emissions, regulations, and what have you. And, you know, fleet renewal in the sense of getting ready for the new era that is coming on. And this is not, so this goes outside the typical investment decision. I have a 5 or a 10-year-old ship that is worth 20% the new building. You know, I'm never going to order a new building. I'm going to buy the second-hand ship because the returns will always be better. And when the market improves, second-hand prices go up, and then it makes more sense to build new ships. Today, you have a situation where you already have a pretty big order book, and there are certain unknowns up ahead in terms of the demand side. You know, we've all seen the turmoil in the banking sector, you know, uncertainty around the war, inflation, how has that affected consumption? There are many variables in the equation that, you know, no one has a crystal ball to predict. Therefore, it's, you know, I'm not sure that we can say with certainty that we have hit the bottom. I think the best case scenario would be that we go sideways for a period of time, and hopefully within the next, let's say 12 to 18 months, we start things settling down a bit, the dust settling down a bit, and we get in recovery mode. But I wouldn't rush to say that we are now in recovery mode already.
And Tassos, previously, and continuing that conversation, where are we in the recovery mode and new build? But the benefit of containers for investors has been that cash generation, it seems, like George has mentioned as well, and you've done analysis before showing, I mean, the benefit of buying today in the container ship sector based on the asset and the cash flows of future contracts. But where do you think we are in the current cycle as well?
I think I largely agree with Evangelos. I believe there are too many unknowns, too many variables that we need to consider. I mean, the one known is the order book. Everything else could go either way, I guess. There could be great catalysts if the war ends and the reconstruction of Ukraine begins, and if the unfortunate regions in South Turkey and Syria get reconstructed, there will be general economic activity that would drive with it, I guess, containerized trade. That is not directly for containers, but it will drive containerized trade too. There will be a new optimism that will be created. That could be a great event to boost demand and absorb more easily the supply. The coming regulations also could affect supply as well. It could reduce it because of the of needing to stay within the emission requirements. So I feel very much like Evangelos. I think a good scenario would be to move in the near term sideways. I think still many ships are locked in charters, so whoever has new requirements until the deliveries start coming in, it might have difficulty finding a ship, and that probably was the reason of the recent increase in rates. But we are waiting to see how many of these uncertainties will be removed to see the clear trend in the market.
George, would you like to add anything about where we are in the container ship cycle, in addition, following up your capital allocation comments from earlier?
Can you repeat that? I didn't hear you.
Where we are in the current container ship cycle, do we still have some bottoming to do?
That's the $1 million question. I think that we are, historically, if you delete the last two super cycle years and you go pre-COVID, we are at a very good level today. So the charter rates are at very high levels in comparison to the normality. So they're back in normal territory and high levels in comparison to the normal territories. I think that depending on the sector you look at, smaller ships, medium ships, large ships, the order book is focused on large ships. It's quite a large order book on ships above 13,000. Between 2 to 10,000, the order book net of scrapping, and if we assume that every ship that is 25 years old is going to be scrapped, then the order book is about 5.5% for the remaining 3 years, which is very low. So I'm not worried that much for these categories of ships, and I think that we will see further reductions in charter rates come, after close to, I don't know, September, October usually is the low season. That's what I would expect. But until June, July, we should see stability in the rates. And thereafter, we will have to see how the world economy reacts. We do know the order book, and the only unknown is the world economy. And containers is relatively simple to predict because it's, well, you see what's the supply of ships, and then you just look at the world economy. So that's what I think on the market.
Thank you. And Clemens, anything you want to add? You started the conversation talking about the bottoming and more activity in the S&P market too. And if you want to reiterate some comments there where we are in the current container ship cycle, but also I want to hear from all the panelists, if you do mind, where do you expect future growth in container ship trade in this current environment? Will there be more trade outside of China as well too?
I think your question started as well a little bit of where do we see the cycle and the movement of the cycle, and it's very often you see that on the period of the charter period. You can see obviously in the boom time we went up to 3 years, but very often it's just the movement from 6 months to 12 months periods. You can see where the liner companies see the cycle. Obviously, once they expect increasing rates, they go for longer. And we recently have seen the market going from 6 months more to 12 months on the feeder size, So for now, it seems like the liner companies see a little bit of a bottoming out. At the same time, I agree with George that I think the autumn will be more challenging than now. I think the container market has such a large order book, and it's wishful thinking if we continue as we are, because we are still, if you compare it to pre-COVID, we had a very, very good market, and container shipping will continue celebrating if we go through the crisis at the rates we have right now, and the size of the order book. In a way, regardless if it's on the big ones or the small ones, the order book is very big, and with such an order book, there will be more pain in the container market for the next 2 years. There will be very painful times, I expect, but they will bring the opportunities too, and you can see that a lot of people are not investing now and rather pay down debt and save the money and don't go for too many orders. So it will bring the opportunities, but there will be more pain to come for sure.
In some sense, if I can add something, it's an interesting point in time because all of us have, at least the owners, have a good cash flow over the last 2 years, very strong balance sheets. And despite the fact that indeed the order book is high, we look this more as an opportunity, as Clemens started insinuating, than a direct threat. So we're looking to find good investment opportunities. There is also a difference between the old and small ships in terms of the order book. And there is some trickle down, obviously, all the time, but not 100%. So I feel that the feeders are to some extent better positioned than the very old, very, very big ships.
I totally agree with this, and in a way, one of the things I noticed on the last year traveling, particularly to Greece, when I flew home, it felt good because nobody really wanted to do much. And as a broker, that's maybe bad, but as a long-term player in the market, it feels good if the owners are sitting more on their hands, paying down the debt, and too many just remember all the problems from the past and don't want to be back into the problems. So the container shipping didn't leave many people naked with the drop. Basically, everybody had a good party, everybody had a good drink, and everybody sits there maybe still drunk but smiling, and it's people are not so exposed, and that's in many other areas too. And that's I like that on the market the last year, that you also didn't have enough, or you didn't have a lot of other money coming into the market, whether from banks wanting to push the loan books, as we had in the German market in the past, or you didn't have any equity really looking to enter the market. So it's really feels very healthy.
Yeah, and the ongoing dividend payments, all the companies on our panel have paid 4 quarters of unchanged dividends, I believe, and I mean that as creating additional returns, even though the stocks dropped last year, but that was after 250% plus returns 2 years ago. So it has managed. And on the dividend policy front, I mean with the longer you still have meaningful contract coverage, so to speak, compared to other sectors of the shipping industry. Does that support maintaining your current dividends, I would expect?
Yes, it does. I mean, we have a 2.1 billion contract backlog, and with counterparties that are expected to fully perform. So we do have visibility of cash flows. On the other hand, it was mentioned before, you need to have certain capital allocation priorities. At this point, we are paying out a dividend. We want this dividend to be consistent and sustainable, regardless of where we are in the cycle. And we have the ambition of gradually growing it, provided that we can also grow the revenue base and earnings. At this point, and where stock prices are trading with the general sentiment, which our stock prices where we're trading has nothing to do with who we are as companies, right? And the fundamentals and the cash flows and all these things. It reflects the broader sentiment, I guess, for the broader industry, concerns about demand, consumer demand, inflation, and so on and so forth. If you want to talk about returning money to shareholders at these price levels, the buyback should be the preferred option instead of a dividend. We have a buyback program in place. We have partially executed on it, and we want to continue executing on it. But definitely the dividend we believe is a necessary ingredient, and we will continue paying it out, and hopefully when we can attract more investment, more opportunities that are accretive, we can continue growing it.
I have found it impressive container ships, even though all the headlines are about the new build cycle, most of the companies continue to repurchase and pay dividends. I mean, Tassos and George, you as well too, and anything that you want to signal to investors with your most recent quarter and dividend announcements, please.
I think it's fair to say that the last 2 years, all of our companies here were able to take advantage of the strong rates, fortify, we like to use this word, the balance sheets, and ensure that we'll become more normal companies paying a consistent dividend over a predictable amount of time, given the strength of the contracts. We also have about more than 400 million of contracted revenues, and we believe our dividends is in good shape for the next couple of years at the very least. Share buybacks is a great way to return shareholders' money and invest at the same time, because I believe all three of us trade significantly below our NAV. Would you agree, George? Or?
Yeah, although for containers, I do not think that NAV should be the metrics. I think that's more of a bulk carrier tanker metrics, because as you know, the value of a container is not related very much to the charter-free value, but it's what's the charter-attached value.
We trade even below the discounted cash flows from the charters, I believe. So in any case, share repurchases, we consider it as a good investment for our shareholders. We're buying assets at below their intrinsic value.
Yeah, and the dividends paid to weight, your average dividend yields on this panel, annualized dividend yields about 7% as of this morning. Clemens, I didn't follow up with the earlier question. Are there any, besides the new builds entering the market, is there a significant future changes in global container ship trade? We've read all about the rerouting in the whole product and oil tankers. Any new sources of demand for container shipping that you could point to?
Well, I pointed out earlier a little bit on the buying interest to replace some of the ships withdrawn from the market. And actually, that's one interesting aspect as well, that MSC keeps on continuing to trade Russia and trade New York. So it's interesting how they can do that. It is widely published. Otherwise, there's a lot of talk for a long while already in how far production moves out of China and production moving to Indonesia, Vietnam, or elsewhere. And that's happening. It's maybe not happening to the point that they close a factory in China and reopen in Vietnam, but it's rather that the next factory is not going to be in China. That's positive for container shipping in general, because it's just will need more feedering in particular. And if you look at India, there you have sometimes big port developments, but the infrastructure behind the port is not allowing really 20,000 TEU ships to come in, because the inland infrastructure is just too small. So in general, that's good. So you're going to have some nearshoring to Europe or to Western world, to America, but that's not really that big. There's a famous example of Adidas, which opened up a factory in Germany some years ago, to produce very automated shoes there, and after a few years, Adidas closed the plant again. It was not profitable, and they rather again produced the same shoes in China because more profitable. So I think the movement will be rather from China, maybe the next factory in Vietnam, but not too many factories back at the Western consumers at least, and that should be positive for feeder containers.
Can you, following up that to the ship owners, can you comment for my education as well, the benefit of operating your types of fleets versus the large liner companies, Maersk, Hapag-Lloyd, and what are the different natures of operating your fleets compared to the huge mega container ships? George, would you mind commenting on that?
Well, the way that the liner companies operate their ships is a bit different than what we do. I mean, we charter our ships to them, so we follow when they have a need. So they focus mainly on large ships, liner companies. Usually, the focus is on the ships that are above 13,000, 14,000 These are the major ships that they use. Then they fill up their lines with the smaller ships. They do own some of the smaller ships, but they mainly take them from the ship owners. So, our job is to fill the gaps for these guys and to foresee what is the type of ship that they will be needing in the foreseeable future. We focus more on second-hand ships rather than new buildings. We have done new buildings in the past, but we feel that right now it's better serving our strategy second-hand ships because we want the profits to get into our balance sheet immediately, so to be accretive straight away from the start line, all the EBITDA. And we feel that it's also, we want to be nimble, so we want to be able to foresee what the needs of charters are in the next 6 months or 12 months. We prefer that.
Thank you. And Tasso, you have previously pointed out difference in new build rates between your fleet size compared to the large liner companies. Can you point out that difference?
With your permission, I would like to make a reference back to the dividend yield. You mentioned a 7% average. I think our dividend is 11%.
Yes, yeah, you are.
So
Because ours is
clarify that.
Yeah, because ours is 5%. So there you have it.
Yeah, there comes the difference. So your question is vis-a-vis our liner companies, how our...
The new build, percent of new builds in the market.
I think we saw an opportunity. We are a feeder-focused company, right? So we wouldn't look at the very big ships. We would look at the smaller ships. We believe the feeder sector is the one that is less well served by new orders, and we found the opportunity there by looking at the comparison of prices, new building prices versus second-hand prices at the time, to embark in the 9-vessel new building program, selecting the most commercially desired feeder sizes, the 2800s and the 1800 TEU vessels, and essentially move the company into the next year after the charters of the existing second-hand ships expire, that by investing in the most modern and environmentally friendly designs that are currently available. With the existing fuel technology, I guess, and choices, the ships we're building are the most fuel-efficient ships that one could build. They have 30% or more less fuel consumption than existing ships of similar size. So we believe we're making a big step towards a more environmental friendly fleet. We're doing our bit in investing in reducing in the fight against climate change, and essentially serving our shareholders and our clients by focusing on the most desired ships.
Evangelos, is there a difference to your new building plan compared to what Tasso's just described with his company's new
No,
building
I
plan?
think the two gentlemen that spoke before me have covered the basis. Effectively, our customers want to own the bigger assets that they consider as core assets for the main haul trades, whether it's Asia, Europe, or Trans-Pacific, and they turn to people like ourselves for the provision to cover the remaining requirements, through chartering in tonnage, they also maintain the flexibility of what fleet mix they want to have going forward, what ships they will renew, which ships they will leave behind. And this is where it's important, as it was mentioned, that we own and operate and offer to them vessels that are needed for their business, and being emissions friendly definitely will go a long way in the coming years for your ships to be chartered first and at better rates.
Well, you all have very valuable comments on what to look for in the industry in the coming months through the years, and I look forward to the different data points from your companies to follow the cycle in container ships, which continue to have the meaningful dividend yields and balanced capital allocation strategies. And I want to make sure to give all of you time for a closing statement or to circle back to any topics that you feel we didn't address. Circle back in a reverse order. Let's keep going that to you, Clemens. Anything that you want to touch on before ending our panel today that we didn't talk about?
No, I think we discussed most, and as I said before, I'm sure the market will get more difficult, but a few people are exposed. and yeah, it will be painful, but it will be maybe good because for us is what we look at 25 onwards, and there's many markets. We think ordering new buildings will be very difficult and costly, and so replacement costs will go up, and I can't see too many orders coming after this order boom. And so we're quite positive actually for particularly the years 25 onwards in the container market or other markets as well. Everybody struggles, and particularly if you're a public company, you cannot just go and order any easy spec new building. You have to please your shareholders and everybody else, and order with the latest dual fuel engines and put everything in it, which makes it expensive. So ordering will be more difficult. So we look at it as there will be opportunities on container shipping, and should be a good future as well after 25.
Thank you very much. George, anything to highlight on global ship lease that we did not touch on?
Yeah, I will say that I'm pleased with what I see ahead of us. In shipping, you can only make money if the market is volatile and it's cyclical. So we've been making a lot of money, we've been securing cash flows. Now it's time to find the cheap assets to keep feeding the cow, like I said before. On the other hand, having a strong balance sheet and ability to modify the ships is going to be a big differentiator going forward, as all of our customers are very interested in how we will reduce the fuel consumption and the CO2 emissions. And in doing so, you need to invest money into these ships, which you will take back, obviously, from the charter rate. So it's not a matter of losing money, but it's just a matter of lending, in a way, money to the company from the balance sheet to improve the ships, and so that our ships are superior to our competitors who don't have the financial ability to modify their ships for the future requirements that we see now all over. So I think that it's a great market for us. We haven't invested in anything. We haven't got anything that we need to spend money on. We can only be very opportunistic and nimble.
Thank you, George. Tassos, closing statements for Euroseas.
Thanks, Tate. Euroseas is almost 20 years in the public markets. Has managed to go through a period that is mostly difficult. I think other than the last 2 years, the previous 10 were very, very difficult years, especially for a container shipping company. Since 2018 is a pure play on the feeder sector, and has positioned itself well to take advantage as much as we could of the last 2 years of the high rates by entering into significant contracts in terms of length and size. So with that, we have been able to provide a good dividend for our shareholders of 11%, as I mentioned earlier. We're doing a share buyback program, so investing in our own assets, which I think were very cheap. We have embarked on a new building program to ensure that we'll be there to serve our clients and shareholders. And we believe we can manage the next couple of years when the order book will have to be absorbed. And as Clemens said, we look after 2024 to better times to come, and we're also quite optimistic about our prospects.
And Evangelos from Danaos, please.
Yes, there are obviously challenges and uncertainties ahead. Challenges when it comes to emissions regulations and how this whole thing will be managed by the industry, what fuel will prevail, what sort of investments one needs to make, uncertainties relating to where this is all going to lead, all the situation with the war, the banking sector, issues that we see are now surfacing, and broader issues around inflation and demand. But the other thing is where you are as a company. We have reaped the benefits of a very good market. We have done, I believe, very wisely in terms of allocating capital. We have reduced leverage considerably. We're close to net debt zero at this point, and we're actually being very challenged to find good investments. And we're looking forward to be able to source attractive investment opportunities with manageable residual risk, which is the most important thing when you invest in ships. So we're very well prepared. We have a fortress balance sheet, and I believe the future for Danaos is bright.
Great. Thank you very much to you all. Thank you very much to our container
Thank you,
ship
Tate.
panelists.
Thank you.
Thank you.
Thank you, Tate.